Good morning. This is Dave Toth with an RJO MRT Technical Webcast update on the energy complex for Tuesday, January 25th. Yesterday and overnight, a lot of developments are unfolding that could be quite ominous for the energy contract and, by correlation, possibly for the equity markets as well. And starting off here with a March intraday look at the crude oil market, you can see yesterday's and overnight's continuation of the past week's sell-off below the key 88.45 corrective low from January 7th that not only perpetuates at least this intermediate term setback, but confirms on a daily scale a bearish divergence in momentum that's the most significant threat to this market since the correction we had back in November. And arguably, the extent and impulsiveness thus far of this break below the 87.25 corrective low from January 7th warns that that 93.02 high from last week could be the end of a broader Elliott wave sequence that dates back to the August 25th low at 70.76. That exposes a larger degree correction or reversal lower, even a Fibonacci minimum 38.2% retracement of which would project down to around the 83.80 area. From a short-term perspective, and because of some scale issues that could mean that in the RBOB and heating oil markets, similar setbacks might just be bull market corrections that may not have a whole lot more to travel. We think but understanding that the RBOB and heating oil markets absolutely take their lead from the crude oil prices. It's important to look at some shorter-term risk parameters that the crude oil market is now required to recover above to arrest this clear and present intermediate-term sell-off and define a more objective low from which the longer-term bull trend may be able to resume. And we think the closest level of importance is this 88.90 area, some support from late last week that after being broke, provided new resistance. And most importantly, that's a level that if the market can recover above, it will jeopardize the impulsive integrity of a larger degree bearish move. For the time being, and in some traders from both a short and longer term perspective have been advised to neutralize their bullish exposure and move to a sideline position for fear of a larger degree correction or reversal lower. Strength above at least 88.90 is now required to define a more reliable low that might then be able to be considered an objective base from which to reconsider bullish policies and bullish exposure from. But until or unless such strength is shown, we don't want to underestimate the extent to which this market might now be vulnerable, especially given the huge extent to which the large spec community has its collective neck sticking out on the bull side, with a 74% reading on our MRT Bullish Sentiment Index, most recently reflecting 347,000 long positions to just 121,000 shorts. That long contingent is now in the hurt bag, and that might result in some capitulating moves that could accelerate this move south. Moving to the RBOB market, and similarly from a short-term perspective, the intermediate-term downtrend is now clear as a result of a break below last week's 241.65 low. Interestingly, however, to this point, the sell-off from last week's 251.92 high basis the March contract has unfolded into only a three-wave sequence. And interestingly, this resumed portion of it and prospective C-wave portion of it has spanned a length that's identical to last week's initial counter-trend break, that 100% progression relationship at 239.52. Overnight's low thus far is 239.35. So it's not beyond the realm of possibility that the past week and a half sell-off attempt is a complete three-wave bull market corrective sequence. But just like with the crude oil market, we need the market to provide some proof of non-weakness, and we think at least strength above the 243.81 minor corrective high within this recent sell-off is needed to arrest this decline and increase the odds that it is just a three-wave and thus bull market corrective sequence. But given the extent of the past week's break, even the past few days' break, from a broader perspective, with any kind of resuscitation to the broader bull trend, we need this market to prove strength above high from Monday at 249.79 to confirm this sell-off attempt as a three-wave and thus bull market corrective sequence. And until this thing can show strength above at least 243.81 and preferably 249.79, the trend is indeed down and should not surprise by its continuance and perhaps even acceleration. But from a longer-term perspective, looking at a daily chart here, you can see the significance still of the early January 236.88 low, a general area of former key resistance and new support, and that's still the level this market needs to fail below to confirm a bearish divergence on a daily scale and a more sufficient scale to contest the longer-term uptrend and expose a much larger degree correction or reversal lower. So it kind of comes down to a scale issue. From a long-term perspective, the technicals are still positive until or unless the market breaks below 236.88. But clearly, from a short-term perspective, this market has shown some weakness, enough so to warrant shorter-term traders with tighter risk profiles to move to a neutral sideline position. And finally, and somewhat similarly, on the heating oil market, you can see overnight's break below the 259.90 corrective low from last week that confirms a bearish divergence in short-term momentum, and in fact defines Monday's 268.08 high as the end of at least the latest phase of the secular bull market from the 247.50 low from January 7th. From a longer-term perspective, however, looking at a daily log scale chart here, you can see the general area of 258 handle area of former resistance that now should be considered a new support condition within the broader bull trend. And the developing bearish divergence threat and momentum, but on this larger degree scale, we think the market still needs to fail below the early January low at 246.78 to confirm this divergence of a scale sufficient to contest the longer-term bull trend. And indeed, from a daily log scale close-only perspective shown here, the market remains a good deal away from that former 255 handle area resistance that now should be support. And from a long-term perspective, it's not hard to see the past few days setback as merely corrective, well within the confines of a mere bull market corrective sequence ahead of a resumption of the broader bull trend. So from a longer-term perspective, we think it's clear that weakness below at least the 255 handle, and preferably a break below the 248 handle on a close-only basis and below 246.78 on an intraday basis, remains required to contest this bull trend from a long-term perspective. But from a short-term perspective, clearly the market has shown some cracks here, and we believe it's worth approaching this setback attempt first as a bull market corrective sequence. You can see that thus far the market the setback overnight has stalled at exactly the 50% retrace of the 247.50 to 268.08 rally, but nonetheless, at least on a short to intermediate term perspective, the trend clearly is down, and enough to have warranted shorter term traders with tighter risk profiles to move to a neutral sideline position below 259.90, leaving them somewhat in limbo and waiting to see whether this is just a mere bull market corrective sequence by virtue of confirmed bullish divergence in short-term momentum. If and when we get that, that'll increase the odds of a resumption of the broader bull trend and provide another favorable risk-reward condition from which to reset bullish exposure. But until we see that, we don't want to underestimate the extent to which this short to intermediate term setback might be vulnerable to further corrections lower, or quite possibly the start of a much steeper reversal lower, given how ominous the situation looks in the underlying crude oil market that certainly drives the RBOB and heating oil market as much as anything. Please stay tuned to updates on these and other markets on our RJOMRT.com website, and good luck with today's trading.